She's really been noisy lately. Evian. I got this on the ship. Bottled water. Bottled water. Bottled water. That's my name. Evan. Evan. I really got to do my taxes. I wonder if I made a mistake the first time I did them, because this would be the first year, 2024, that I have to pay money. Are you kidding me? That never has happened before. Ever, ever, ever. Never, never, never. Never, never, never. I should be recording. Yeah. Let me just double check everything. Normally, I get a refund. I wonder if my subscribers get a refund as well. I'll have to ask them. Refund. I like taxact.com. Been using it for years. So let's just go see what's going on. Because I did this yesterday and I'm not happy. Not happy at all. Having to pay a little bit of money. A lot of money, actually, unless I did it wrong. Let's see if I can get signed in. TaxAct.com. Why is that not working? I don't know. I cannot get used to this laptop. I wish I still had my old one. TaxAct.com. Okay, there we go. Sign in. Relax. I'm doing my taxes. Password. Continue. Signed in. Welcome back. Thank you. Continue where I left off. Relax. Relax. All of that is good. Income. Okay, this is so interesting to me. Shh. Relax. Relax. I don't hear any jets right now. That's amazing. No jets. No jets. No jets. Okay. I like how they put down 2023 and now my 2024 numbers. 108,000. Is that right? Review. From my W-2, inbox number 1, wages, tips, and other compensation, 108,020.71. And I had to add YouTube income here as well. But this will be the last year, Evan, that you are an employee of a company. No more W-2s for you, ever. Got it? Good. Good. Good, 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 good. Good, 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 good. Okay, continue. But something just doesn't seem right. Taxable interest income. Let's take a look. $7,240. Hello. Okay, this has never happened before. This has never happened. Unprecedented. Okay, so CDs and money markets have been doing really well over a couple of years, right? You've been building cash reserves to prepare for your retirement. So in 2022 and 2023, you never had so much taxable interest income before, ever. $7,240, which is from my Ally savings account and my Ally 3-year CD and my Ally 18-month CD. Because what happens is, with CDs, you pay you pay the taxes on the interest income for the year that the CD accrued the interest, and not when you sell or collapse the CD or whatever the word is. Every year you pay the interest while it's still accruing. So you really have to come up with money somewhere else to pay the taxes on that interest income. $7,240. Yeah, right, because last year it was only $1,300. I'm glad they put that there. That helps me understand why I'm having to pay a tax return and not get one back. I'm so spoiled. I'm used to getting a tax return. But I think that number is too high. That's crazy. But let's move on. Taxable ordinary dividends are actually, it's about the same as last year, 2852. Click the review button. Review. It's from my 1099 DIV, which you get from a bank or a credit union. Because with your taxable account, you only pay taxes on the dividends and not the unrealized gains. You only pay taxes on the unrealized gains when you realize the gain and you sell. Some of the shares. Which reminds me, that guy had a really good comment recently on my channel and wants me to reconsider my disaster recovery plan, not using the taxable account. Because if this place does flood, in a year when the market is down, I don't want to sell those shares in that year. So I should use the Roth IRA instead. It was a brilliant suggestion. So thank you. Because money is earmarked. Yeah, you'll have to share that with your subscribers. What you do is you earmark. You mark money with your ears. No, you earmark it. You say, okay, I've got all this money going on, and I'm earmarking. I'm saying this. I'm going to set it aside. Yeah, set it aside to be used if it's needed, and it's still growing in the market, but it's earmarked, and so I really like that suggestion. Anyway, back to my taxes here for 2024. My dividends, what is it, 2852? Let me go back. How do I go back? I don't know. I'm going back to income. Okay, so yeah. Now, yeah, that's the same as last year. I paid interest. I'm sorry, I paid taxes on the interest. Not the interest, but the dividends. What are dividends? Dividends are parts of a mutual fund that are paid to the investor and get reinvested in the fund itself. It's like a total market return. I remember reading that somewhere once. Your mutual funds that you purchase, especially like you, Evan, you've been doing low-cost index funds. The total return includes not only the unrealized gains in the market, but also the dividends. It's like if you had a company that is owned by shareholders, and at the end of the year they get money for owning shares. Yeah. So with a taxable account, unlike the CDs, you're not paying taxes on the gains. You're paying taxes just on the dividends. So 2852 is the number for taxable ordinary dividends on my tax return. And here we go. This is brand new. Business income from ASMR Money Mentor. $677 because the YouTube people gave me a 1099 miscellaneous form, and I had to create a Schedule C to declare that income, and I had to pay taxes on that $677. I'm in a higher tax bracket, obviously, for 2024. It will be the very last year of probably my life, ever declaring this much income, because remember, you're going to use your Roth IRA for many years going forward, like what was it, 15 years or so. No taxes on that whatsoever. You're only going to sell shares of your taxable account to qualify as income to get the reduction in the healthcare premiums. So let's move on. Interesting. Okay, so there we go. We've got all the numbers here. Let me go back. 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 Relax. Relax. You're just getting older by the minute. What is that obnoxious noise? now, but it just stopped. So I'm going to go back. Income. Okay, so remember from the W-2 108, taxable interest income 7,240. Income on the dividends of the taxable account 2,852. And then 677 for YouTube. Now I qualified for the standard deduction, 14,600, and a business deduction of $154. I'm not sure how I did that, but as part of taxact.com, that was their suggestion. Okay, so my total taxable income for 2024 turned out to be $103,000. Yeah, I guess because you add all that up and then you subtract the deductions. Now, 2023 was $93,000. So, Evan, you made $10,000 more dollars in 2024. Did I say that right? I made $10,000 more dollars in 2024 than I did in 2023. I'm using an easy 1040 form, I guess. So, my total taxes due this year, $17,838. But I paid through my paychecks $16,552. Thank you to my employer. But that means I owe, drumroll please, $1,286. Yikes. 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 Now I remember when I was doing this yesterday, before I put in the YouTube income, it was 1,000. Once I put in the approximate 700 from YouTube, the taxes on that are about 280. Makes sense. But I will be in a lower tax bracket in 2025. Right now I am, right? Yeah. Because remember, you're going to need to declare income next year. You had a couple paychecks. You're adding it up on your spreadsheet. You already got to the 16,000, which is the minimum amount to qualify for the tax credits that you're getting for healthcare. But you will work on that next year. For this year, I owe $1,286. I must have done it right. I was hoping I could have found something that was wrong, although I think I did it right. My standard deduction. Just let me look through everything else. Everything else. Everything else. Everything else. I wonder if my subscribers like doing their taxes. I used to like it when I was getting a refund. But you know, they always say that you should try to get it to as close to zero as possible, because why let Uncle Sam, meaning the government, earn interest on the money that they're holding for you only to give it back to you? That makes no sense, right? CENTS. I just wonder if I did this correctly. What part am I still confused about? I'm still confused about for my W-2 when I put in those stupid boxes. Remember that? Yeah, those boxes for what I put into my health savings account. Did I do that right? Because you don't pay any taxes on that. I'm gonna have to look at it closer, but I think it's somewhat correct. But here's what's interesting. I'm gonna, with a fine-tooth comb, look at those numbers in more detail. But, relax. 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 I really don't need to pay this until April 15th. I bet some of your subscribers quickly do their taxes because they get a return. I remember I did that. I was like, get it done by February because then I could get the return. Now, this is not due until April 15th. So, Evan, relax. Relax, relax, relax. What's important about this, even though you don't like paying all that money, think about it. Think about it. Your CDs paid a lot of money to you. That $7,000 or whatever that number was, that's a lot of money. So you're paying $1,000 on that. So instead of making $7,000, you made $6,000. And you're taking money to pay the taxes, but you already have the money in the CD itself. It's gonna stay there. It's kind of a mind twist how that works. So even though I'm paying $12.86, I made a lot of money on those CDs. If I just had those CDs sitting in a cash account, cash account, cash account, cash account, then I would not have had all that interest income. So that's how you have to look at it. But again, who really likes to pay money? But that's how money works. Don't think of this as you paying the money. Again, you made income from letting your money sit in a certificate of deposit with no risk whatsoever. CDs are not in the stock market. They're short-term reserves. So you've got to tell your subscribers, if they have money that's just laying around, they need to put it in a money market, an online savings account, or maybe a CD, especially if they don't need that money. Well, no, let me back up. Yeah, if you don't need the money for the term of the CD, then great. If you need the money in the next year or so, then you might want to park it in a savings account. But just make sure those savings accounts are making the highest interest. Go to bankrate.gov. Bankrate.gov. Take a look at credit unions and banks and find savings accounts and money markets that are paying the highest interest. I think right now, at the time that I'm speaking about this topic, it's still that money markets are paying pretty high, 3%. I don't know if you can get 4% right now, maybe. I'm so glad I locked in my CDs for 3 years. I have one at about 5%. That's the one that I had to pay all that interest on. Now, for 2025, the year we're in right now, remember, back to what I was saying just a minute ago, the only income I'm going to show in 2025 is those paychecks I got from your employer. This kind of stuff that's going to happen again is qualifiable income to get the tax credits for healthcare. So keep on track. Keep track of those numbers, because this is going to happen again. And then every year going forward until you get to 65, unless they take the Affordable Care Act away, which I hope they don't. Most people are saying that it won't go bye-bye, but I wonder if most of your subscribers are thinking about stuff like this right now. They're probably not, if they're still building their wealth. Building their wealth. Building their wealth. Building their wealth. I always like to refer to this as on-demand knowledge. ODK. On-demand knowledge. You only need to know what you need to know while you are building your wealth and creating that engine that is going to be as large as it can possibly be. On demand. On demand. On demand. Like, for example, if you're still building wealth, you just need to know to get your income up. Keep your expenses down. And then save that difference in these accounts that I'm talking about. And if you don't need that money, or if you need it in 3 to 5 years, maybe a CD would be a good option. If you're saving for a home, then you can do that as well. But most of their money would be better positioned most likely in investments that are a part of the stock market, like low-cost index funds that we talk about all the time. But yeah, it's all about on-demand knowledge. I only need to know what I need to know in this year. And Evan, that's what you've been doing all these years. That's what you need to tell your people, your subscribers. Don't be overwhelmed by personal finance. So many people are, but they don't need to be. Every year you need to do what you need to do in that year. If it's paying off debt, pay off the debt. Then next year you regroup. What do you need to know? Execute it. Then the next year, what do you need to know? All the while, your net worth should be going up and not down like most people. And here's an example. Even you, Evan, right now, will be figuring out in the month of March, by critically thinking about the buckets of money that you've created, how they will be earmarked for withdrawing in the next 15 to 20 years. You're going to figure that out, most likely, without the need of an advisor. And it will make sense to you because it will be the best thing for you to do because you know what to do. You've been doing it all these years. And your subscribers need to know what to do as well, and they will figure it out as well. So, I think I'll look at this a little bit later, but again, the good news is I do not need to submit this until April. That's a couple months away. So, or maybe a month away. Anyway, alrighty, Evan. Congratulations. You've just convinced yourself that owing money on this tax return is a good thing, as opposed to how you felt about it yesterday. So, congratulations.